Ladies and gentlemen, welcome back to PoorConsult's YouTube channel. In today's video, we're going to talk about Ethereum, its upcoming merge. We're going to discuss about our previous videos warning that I have told you to be careful about Ethereum's possible dump, that it's most likely going to happen near September 19. We'll talk and discuss about what Ethereum Merge is, what to expect from it, why is everybody so excited about it, and what effects it might have not only on Ethereum itself, but on the entire crypto markets in general. So if you want to know about it, then just sit, make yourself comfortable, get some tea, coffee, and without losing some more time, let's jump right onto it. Okay, so here we go. First of all, let's understand what is Ethereum Merge, and as you know, it's already announced that on September 19 the Ethereum will transition from proof of work to proof of stake. And in this video, I'm not gonna go details of proof of work and proof of stake, how they operate. I'm just gonna tell you what's gonna happen on September 19 on Ethereum, so as you have a good understanding of it, and we can estimate, try to estimate a possible impacts of price on Ethereum's price after the merge. The merge this event might have on it. So first of all, you know that Bitcoin halving every 4 years, Bitcoin halving, when Bitcoin and Ethereum, they both operate on proof of work. They have this proof of work consensus mechanism where all the miners, in the case of Bitcoin, and the nodes in the case of Ethereum, all they compete with each other to solve this hard mathematical problem, the equation, and they use electricity. All right, they waste basically the electricity to do so, and the machine, the miner, whoever solves the problem first gets the reward, and this is coming from thin air, both in the case of Ethereum and Bitcoin as well. So they are both getting incentivized for performing this task by getting some Ethereum from the algorithm itself, okay, from the network itself. So every 4 years, the Bitcoin halving, the issuance of new Bitcoin is being divided by 2, okay. So it's going to less and less Bitcoin every time after every halving. So the miners are getting rewards. The rewards that miners get are being divided by 2 every time. So and that's the main reason why Bitcoin in the beginning was being used as a currency. To pay, to transfer for each other. But as the amount of Bitcoin is, the new issuance of Bitcoin is becoming less and less. So Bitcoin is transferring more to become like a scarce asset, okay, because it's only going to be like 21 million of it, and the issuance of it, the inflation of it is also going down, so people are trying to hold it like gold, all right, instead of spending it. So the same for Ethereum for now, but let's focus for now. So Ethereum, we have this execution layer, okay, EL, execution layer, and on this execution layer we have all our smart contracts, decentralized applications, all right, everything is on this execution layer. And then we have the consensus layer, let's call it CL, and on the consensus layer, the consensus layer is basically the proof of work algorithm, okay. So the proof of work algorithm is the consensus layer, and as I have already told you, same as Bitcoin, all right, the nodes in the network, the nodes connected into Ethereum network, maybe you are running one of the nodes as well, all right. So all of them are trying, they are using electricity to validate Ethereum transactions, okay, this consensus mechanism, proof of work. So Ethereum is trying to transfer from proof of work to proof of stake, all right, POS, to consensus mechanism, all right. So most of the altcoins are already on proof of stake, and this is like a big debate between the Bitcoin maxis and the others who are saying that proof of work is the safest, all right. Satoshi Nakamoto has designed it like for Bitcoin to operate in this way because it's the safest. But alternatively, if proof of stake it wasn't safe, then if you know how to hack it, then you can become a billionaire, all right. So for now, this is safe as well. And anyway, Ethereum is already like how many years trying to transfer from proof of work to proof of stake, and finally this is the first step of it is going to happen on September 19. So what's going to happen on September 19? The merge. Why we call it the merge? So this proof of stake this proof of stake algorithm. All right, this is already running. I mean, the beacon chain, it's called the beacon chain, okay, where it's has been already running for several months without issues. All right, so beacon chain is basically the proof of stake. So the beacon chain consensus layer, all right, this beacon chain, this proof of stake consensus layer, and the execution layer, they are going to get merged. All right, merged, combined with each other. So the execution layer, the application, smart contract, everything will be validated, all these transactions, using proof of stake instead of proof of work. Okay, so this POW will be changed with POS. So that's what's gonna happen. All right, so this beacon chain, the POS, has been running for several months already. People are trying it out on the test nets like Rinkeby, Robston testnets of Ethereum, and on September 19 has been announced, if no more delays, then we'll finally have this merge. Okay, that's why it's called merge. I hope now you understand. And let me tell you right from now that it doesn't mean that the transaction fees will go down, and I mean, it won't have that much of an impact on transaction fees yet, because for transactions you need to have something called the sharding, okay, the sharding technology that will be implemented later on. So for now, this is all that you have to know about proof of stake and proof of work and the merge. Now, what type of effect it might have on price, as I have already told you about Bitcoin, that once in 4 years, when the halving happens, the issuance of a new Bitcoin is being divided by 2. So for Ethereum, it's now going to be divided by 8. All right, so 8 times less Ethereum is gonna get issued because of this transition. So this means that the supply, I mean the amount of new Ethereum being created out of thin air and injected into circulation, will be shrinked by 8, and you can imagine what type of an effect it might have on Ethereum's price. Obviously very positive, right? So now, but if you have seen my previous video where I warned you that the possible Ethereum dump is coming, all right, so some of you might ask me then, come on, like if all this is so positive on Ethereum, why are we talking about a possible dump? And as I have explained to you in the previous video, this is because this by the rumors sell the news event. Whenever something positive is being announced, well before it actually happens, people are getting excited and trying and buying, all right, ahead of time, before this even happens. Several months prior to it, they are already, because of the excitement they are getting into it, their positive expectations are driving their actions, and they are buying Ethereum or anything else, all right, that has this positive event coming after several months or some time. And then when the day comes, everybody is waiting, all right, they're thinking, okay, something gonna happen on September 19, but nothing happens on that day, and the whales, the smart money, possibly trying to get your additional Ethereum, they are dumping it, all right, so creating a little bit of a panic, and I mean, selling the news event. They are selling it so as they can buy back cheaper from you, and you see the negative price action close, not exactly on that day, but I mean, the closer we get to this day, or maybe several days past it, we might see the negative price action. Exactly the same as happened with Cardano, I'm telling you, last year. If you were around last year this time, September, you would see that last year August the price was like going to the moon, and then when the day came, actually the smart contracts became active on Cardano blockchain, the price dumped, and the bear market hit it, and now it's trading at around 50 cents, but it was about around more than $3, okay, at some point in time last year. And however, I mean, even if this dump happens, still we are very positive on Ethereum, because we are waiting, I'm waiting, the traders are waiting, investors are waiting for this effect of these analytics. The people that analyze, do their research, they are all positive in a sense that after some time, from September 19, this effect of reduction in new Ethereum Ethereum issuance might start to play its role, and then within weeks, within months, within a year, we might see a huge positive price action in Ethereum. Okay, so definitely keeping in mind, and so it's up to you to buy it now or wait until September 19 and then buy then, or do some, I don't know, place some orders, as usually smart people do, place some orders so you can slowly buy at different prices. It's called dollar cost averaging, so it's up to you. And the next thing, one last thing I want to tell you is that if we take a look at the graph on Ethereum's chart, on this daily chart, we'll see that we are here at the major resistance at the 1750, or at the major resistance. So if it happens so that we pass it, okay, if we break through this resistance, then the next major resistance is at 2500. So we might see this this action, all right, this positive price action up to the next resistance level, which is sitting at 2500. If we were be able to not only break this resistance but turn it as a support. And what I mean by saying that is that usually, guys, if this is the resistance, okay, and the price of a token, all right, the coin, it gets closer to the resistance, all right, okay, well, so what might happen then? It might get rejected and go down, go lower. But in a positive scenario, when it breaks through it, all right, and let's say, okay, this line that we have it here, this is the second resistance, okay, the higher resistance. So you won't never expect the price to go, I mean, to break through and then go right away to the next resistance. It almost never happens. So what does really happen is that once it breaks the resistance, then we have a pullback, all right, we have a pullback where people taking profit. We have a small pullback to touch the resistance line again and try to turn it into support. So if it's successful, then once this resistance is being turned into support, I mean, the rebound comes and the price then goes higher, might be again a little bit of a I mean, sideways movement, and then go to the next resistance line. So be careful. And if we apply this knowledge into our chart, let's get a little bit closer look at it. Let me see. So right in here, you see we have this candle, daily candle, going right into the huge move. You see, we tried once, we get to resistance, we got rejected, and a second time, if we are able, and I hope we will be able to break through it, then I do expect at around this level, at closer to 2100 level, a small rejection, I mean the pullback to try to turn this line into a support line, some small consolidation right over here, and then another once we get the momentum, all right, another push into the next resistance level, which is at 2500. However, if we are nowhere, we won't be able to break this resistance, then expect some negative price movements, and we must just get a little crashed and go down to some lower levels. I guess the next support is at around 1500. Yes, so we must get rejected and try to check again the next support, the mini support level at 1500, 450, I mean, level. Alright guys, so that was all for today's video. I hope you found it interesting and learned something new from you. If you like the video, please give it a thumbs up button. If you haven't subscribed yet, please do so as you won't miss any new videos coming on the channel. Have a nice day, and see you all in the next video. Goodbye.